everyone, and welcome back. My name is Greg Furman, and this is the Forex Weekly Outlook for the week of August the 21st, 2017. Now, to get started this week, we're going to begin where we always do, with that all-important US dollar index. Now, we can visually see here that we have significant resistance at the 94 level on the dollar index. The VantagePoint indicators have failed to produce a buy signal in the dollar. This move appears to be corrective to the upside in nature, and of course that FOMC minutes did very little to help the US dollar rally. Now, the additional indicators from VantagePoint, we can see we've had a significant failure also on the 60 level here. We've moved above the 50 on the predicted RSI, but we were unable to show any kind of real upward momentum, and now the RSI is heading lower. Now, we do have the situation with a risk-on, risk-off environment with North Korea. To say that there's political unrest in the US would be probably an understatement at this time, but all of this is combining to hurt the US dollar. So the primary indicators are critical VantagePoint 18-day predicted moving average coming in at 93.47, closing the week 93.35. So the dollar may be down, but it also may not be out. But certainly something has to change here. Now, in order to break, if we can break through this 94 level and the VantagePoint indicators start warming up to the idea of dollar strength, then it has a chance. But right now, with the neural index moving lower, our predicted short, medium, our predicted short and medium term difference in our strength indicators still pointing to the downside, all of which is a negative for the dollar. So when we look at the euro pair, we can see we have a significant trend line coming in at the 118 level. That's our resistance, but we're holding above this critical VantagePoint level at 117.29, closing the week at 117.57. So the upward pressure is still on the euro pair. Our neural index is saying we're going higher. Our strength indicator is back up above the zero line, predicted MACD firmly above the zero line, but there is a warning sign here that it's struggling. But what I will say is we're holding above the 40 and we're holding above the 50 on the predicted RSI, which basically confirms that it's likely we're going to see further euro strength. Now, with the US Swiss franc, this is basically a euro US trade. One goes up, one goes down, but it's more of a risk on, risk off right now. So if the global equity markets are moving lower, then the US Swiss franc pair is going to move lower also. You'll see the Swiss franc strengthen, you'll see the yen strengthen. So right now, it's basically clinging to this trend line here that I've drawn in, and it's really struggling. Our indicators are all moving back below the zero line. We've got another crossover back to the downside on the predicted MACD, and the predicted RSI below 50, but at 42.5. So we don't have that breakout momentum we're looking for, but it certainly does suggest that is coming in the very near future. Now, with the pound dollar, we've had good support here over the last couple of weeks coming in around this 129.50, but we lost that area. Now, case in point here, we can see the VantagePoint sell signal. This started at the 131 area with our 3-day crossing over our 18-day and our 8-day predicted moving average. We then ultimately lost this support level and we've moved lower. Now, we are going to come into some pretty heavy support zones down around this 128. So this coming week, much like what I've said to my own direct clients, I would watch the 128 area very, very closely. If this area holds, we're going to see the pound dollar move higher. Now, this wouldn't necessarily be on pound strength. It would be on further US dollar weakness, but the indicators are starting to move into oversold territory. The position of the predicted MACD is a concern because, again, this one looks like it's just getting warmed up, but the predicted RSI is moving towards oversold territory, so potentially a bounce. But if we can retake the 129.72 area, this key VantagePoint 18-day predicted moving average, then we're going to see a bigger move back to the top of this range up towards the 132 area, but we must get above this critical 129.72 area, and at the very minimum 129.29, the 8-day predicted moving average. These are critical levels for the week, so if we can get back up above them, guys, we've got a shot at buying this pair, which could be very lucrative actually. So With the dollar yen, this pair is a disastrous pair to trade in the month of August with everything that is going on with North Korea, the political unrest. The yen is strengthening right across the board. So our key vantage point level here comes in at 110.24 on the upside. But I will point out to everybody that we do have significant trend line support coming in at 108.50. Now we've closed 109.17. You can see that we've come down and tested that trend line area on Friday at 108.61. But again, we have to be very cautious here. This is a risk on, risk off environment. If risk is still off, the dollar yen will take out this trend line this week. So it really does depend on some of the announcements we hear, what happens with North Korea, what's happening in the White House in the US. A lot of unrest in there. So the dollar yen is probably a good pair to be very cautious of, because you're going to see a lot of whipsaw action where it goes flying higher on news and then it goes flying lower on news, and it's very difficult to trade under these conditions. But I will point out that the triple EMA cross from VantagePoint on this pair took place way back on July the 10th, so we were starting to sell this particular pair way back here. We follow the signal down to the date, so we're looking at about around the July the 12th, July the 14th was the initial signal. We've had retracements here, multiple retracements here, and every time a very strong retracement rate here. I'll point out each time was a fantastic selling opportunity here, guys, based around these indicators. And right now the indicators are warning that potentially we're getting ready for another leg to the downside. So when we see that RSI coming up, retesting that 50-60 area and failing, and then breaking down below the 40, this suggests that this pair is going lower. Now, as we move into our three main commodity currencies, the CAD, the Aussie, and the New Zealand, very similar trades here, guys. Very, very similar trades. So we want to remember that. Now, the CAD has come under weakness. We've had a good rally up here, but it appears to be somewhat short-lived. We've hit a resistance zone of 128, and now we're starting to turn back to the downside from an overbought condition. Now, our neural index is down. Our predicted medium and short-term differences with our VantagePoint strength indicator are pointing down, but the long-term predicted difference still above the zero line. Now, the predicted MACD, we've approached that area, but again, we're failing. If the US CAD has any real upside potential here, guys, we have to get this predicted MACD above the zero line. That's not happening. And now we're at 37.2 on the predicted RSI, suggesting that this move higher was simply corrective in nature, and we are getting ready to move back down as the commodities like oil and gold start to rally. That is the direct intermarket correlation between the CAD, the Aussie, and the New Zealand. So when we look at the Aussie, potentially some very good buying opportunity next week. 78.90, we're closing 78.25. This is the area here you want to watch, guys, right around this 78.90 to 79.05. This is a buy zone. We're likely going to use that along with this trend line that I've drawn in as a springboard to move higher back into the top of this range, probably back up around the 81 or the 80.50 area. So the key levels you really want to watch, we would be buyers on this down to the 78 level on this lower trend line. But our indicators from VantagePoint, they're all pointing higher here, guys. Despite the risk-off environment, we've got our neural index is up. Our predicted short, medium, and long-term differences are all rising. Predicted MACD firmly above the zero line, and 62.8, excuse me, on the predicted RSI. All of this points to further Aussie strength. So what you'll see is a lot of different types of analysis with New Zealand, US, but guys, it's almost the exact same trade here. So we don't want to complicate things. Right now we're testing this critical vantage point level 73.32. If we push up above this to start the week, this will be a very good long trade. We have heavy support down here at the 72. We would be buyers down to this lower trend line. But if we retake the vantage point level at 73.32, then New Zealand is likely heading back up to the top of the current range, which comes in at or about the 75.50 area.